Well, howdy there folks, and welcome into today's video. Today we're going to get into 3 new stocks that I'm looking to add in the public account here today. So this should be a fun video. Hope you guys enjoy this as always. Make sure you're subscribed to the channel if you're not already subscribed. And yes, the big Black Friday sale is finally here. We got the Tesla Maesla deal, we got the jackpot sale, and we got the You Gotta Be High to Fastest Up sale going on, guys. That is to get in the private stock group, the course curriculums, the Discord chat, everything like that. Be part of it with the 100 plus 7-figure members in there, 500 plus 6-figure members in there. And so, yeah, I hope you guys enjoy that. Once you're in there, say hello to me, send me a Discord DM and say hello and what's up. And much love as always, guys. Let's get into this. Alrighty, so first off, I want to look at the public account here. So there's obviously an account I have in the private stock group that you can see every single move I've ever made in the history of this account over time. And this is an account that we're doing pretty well on. We got some positions definitely we can average down on over time. But in this video, we're going to talk about 3 stocks that are new stocks that I could potentially add in this account. And if you're looking at this, we obviously got our EV play in Tesla. We have a plant-based food play in Tattooed Chef. We have a gaming streaming company in Corsair, e-commerce plays, specifically with apparel with Revolve. We have FB, which is, I don't know what we can call FB, social media, metaverse, I mean, there's just so many advertising business. I mean, it's incredible, right? FB is a lot of different things. We have a 5G play, semiconductor company in Skyworks Solutions. We have let's call it diaper wipes, makeup company in Honest. We have Planet, which is obviously an MJ play. We have Dropbox, which is a cloud and e-signing of documents play. We have Elf on a Shelf, which is another cosmetics play. We have Avant Brands, which is a very, very speculative MJ play. We have Upwork, which is obviously massive in the freelance economy, which is something that just continues to take off and grow bigger and bigger. And then we have Voyager Digital, which is crypto brokerage plus hopefully a lot more over time. So in terms of the account, we're up over $1 million, and we've also taken a lot of profits in this account. $107,000 in profits taken so far this year in this particular account. So it's supposed to be a bad year for me, but bad years are different for different folks, right? So as far as this particular account, Voyager Digital, that's definitely one I want to add some more of in this particular account. Obviously, that wouldn't be a new stock. We're going to talk about those 3 new stocks in just a moment, but in terms of positions I have that I want to add some more, Voyager, I got to build this position bigger, I feel like. I actually want to potentially add more Corsair, not a lot more, maybe another 300 shares of Corsair, maybe 800 shares of Corsair, so I can maybe get up to 8,000, 8,500 shares of Corsair here, something like that. I would love to add a little more tattoo, get up to maybe 15,000 Tattoo Chef shares in this particular account. In my big dog account, man, I don't know. I might own, 60,000 shares or something in my big dog account for Tattoo Chef. I don't know, some crazy number in that particular account, 50,000, 60,000. It's around $1 million worth of Tattoo Chef in that particular account. So it might be around 60,000 shares in my big dog account. So yeah, that's kind of what I'm thinking about adding. Honest, I would definitely like to add more Honest and maybe potentially get up to 10,000 shares of Honest in this particular account as well. And by the way, Honest, I'm going to make a video eventually. Hopefully within the next week or so, going into Honest and the revenue growth I expect over time and net income I expect over time for Honest. As far as other stocks in this, I'm not really looking to add to anything else. Not really looking to add to Tesla, not really looking to add to Revolve. FB, I wouldn't mind adding. I mean, it would be easy money, just to be quite honest, if I did add to FB, but it's not like I'm not necessarily looking to add more. Skyworks, not really looking to add more there. Planet, I should add more, honestly, especially with the fact that the stock's been falling. In this particular account, I do have a $1.25 cost basis, so I'd have to get rid of my cost basis. Okay, but yeah, I should buy some more Planet in this particular account. I have my big dog account, which I own a ton of Planet shares in that particular account, like a ton. Dropbox, not really looking to add more Dropbox. By the way, Dropbox has very unusual call options going on. They even talked about this on Fast Money the other day. It was actually yesterday. It was something like 6x the normal call option volume. And essentially, there's a lot of traders out there that believe this stock's going to skyrocket over the next 3 or 4 weeks. Dropbox, from my understanding, next week does have like an investor presentation conference scheduled. So I don't know if somebody knows something and something's going to be announced with Dropbox, and so the stock's going to go up massively over the next few weeks, or if maybe just people are gambling money. But it is a little strange that you get that unusual of activity. Basically, the traders think the stock's going to go up a minimum of 8% over the next few weeks. So we'll see what happens with that. I just thought that would be worth mentioning. Elf on a shelf, not really looking to add more of Elf. Avant, I could add some more Avant, not a ton more, maybe another 11,100 or 111 shares, maybe get up to 9999999, something like that. Upwork, not looking to add more Upwork, although I do love that one as a long-term play. And like I said, Voyager, definitely looking to add more. So yeah, and then once again, this is what we've taken for profits and losses so far this year in this particular account. So that's that there. We want to obviously go through a lot. And so I think if you add up this account and then my Big Dog private account, I think I'm at maybe around $500,000 so far this year in profits taken. So the tax man. That's what I think about when I think about profits taken. I think about the tax man. Okay. Alrighty, guys. So let's get into these 3 stocks that I could potentially add. The 3 new stocks here in the public count. One is Stitch Fix. This one's been damaged. It's at $27 here today, and 52-week high on this one's $113. There's another one of those stocks that has just fallen off the cliff. To be quite simple, under a $3 billion market cap for now for Stitch Fix. And I actually like the business. It's not my favorite business model in the world, but it is a subscription-based business model for clothing, where essentially they learn over time, the algorithms learn what type of clothing you like, and so they'll send you clothing that they believe you're going to like, okay? And so Stitch Fix has an interesting business model that's more subscription-based, so it's actually going to build into a better business model, in my opinion, long-term than the traditional you go to a department store business, right? Because department store business, it's like they could see you, but then they might not see you for another year, right? Or they might never see you again. Stitch Fix, they kind of get you in their ecosystem, and you get used to having clothes delivered to your house once a month or once every 2 months. You can set it up for all different types of things, once every 6 months, something like that, okay? You even enter in kind of what you're willing to pay for products, and based upon, if you don't like the items, they usually send you 5 items. If you don't like any of the items, you just put it in a bag, send it back. If you do like the items, you get to keep them. And the more items you keep from that box, the bigger discount you get. So you're kind of incentivized to buy more stuff from them, because if you buy 3 items, you get a certain amount of discount, and then if you buy 5 items, you usually get a really big discount. So, Stitch Fix, I actually like this one. I like its business model. Like I said, it's not my favorite business model in the world, but I think it is if I look at the apparel industry, I think it's one of the smarter business models that's been built in quite a while. Let's put it that way. And so if we look at this one, they've been doing some international expansion, so that's hurting, in my opinion, their profitability, their net income, their EPS. So as far as, over the next year or two, obviously EPS is expected negative, but the loss is much less. And I think within the next year or two, this business can get around break even, or maybe even start making a slight profit. And I mean a slight profit. Probably looking at like 2 years out, in my opinion, for that. Now, if we go ahead and we look at revenue growth, 16% plus expected this year, 16% plus expected next year. And so we're looking at a company that's under a $3 billion market cap, right? 2.9 or whatever it's at, and never mind if it drops a little more, which this is one of those guys that there could easily be a lot more tax loss harvesting on this one. Remember, the stock was $113 and it's $27 now. Almost everybody in this stock is down a lot, okay? And so this is one of those stocks that could be a ton more tax loss harvesting over the next few weeks. I could pick up shares for maybe under a price to sales ratio of under 1, which I can tell you for an actual subscription-based business, and I understand it is an apparel business, but it is subscription-based. I mean, I think a price to sales ratio under 1 is really cheap, actually. And so, yeah, I'm looking at this one and I'm saying if this stock goes down more and more, it's going to be hard for me not to add it in the public account, and honestly even add it in my Big Dog main private account as well. Because like I said, guys, I mean, this is, I mean, if this went down for a couple days in a row, it'll be trading at under, if you're looking on a forward basis, under a forward price to sales ratio of under 1. That's just way too low in my personal opinion for a business model like this. So, Yeah, that's one I'm keeping an eye on, and definitely a new stock I could be potentially buying. So let me know what you guys think about Stitch Fix, and if that seems interesting, especially if it keeps falling here. I'd love to hear from you guys in the comment section as always. And make sure to subscribe to this channel. Alrighty, next one up here. PayPal. So PayPal, wow, has this one fallen? Literally today, it hit a 52-week low, PayPal. Never been a stock I've owned ever in my life, but I can tell you, it's starting to get real interesting. The good old PayPal. This stock was $310 not that dang long ago. I mean, it was. I unfortunately only had the one-day chart up here when I took the screenshot. But yeah, this is one of those stocks that just, I mean, it's fallen off a cliff. There's a lot of worries about, competitive threats, whether it be Amazon, Shopify, the payment space in general just evolving. And obviously, PayPal owns several different businesses, and one of them that I think is the most popular is Venmo, right? And so it's over a $200 billion market cap, 45 PE, looking at about a 35 forward PE for the stock, which for PayPal is actually fairly cheap, I would say. Especially, man, I mean, this stock, this is one of those, once again, that I think is going to get into a tax loss harvesting situation over the next few weeks, where a lot of folks are just looking at this and they're like, and never mind if you get let's call it a large cap sell-off, because this is a large cap company, right? $200 billion plus company. I mean, if you get tax loss harvesting going in PayPal along with some sort of large cap sell-off over the next few weeks, guys, I mean, there's no telling this stock could be $150 before you know it. And that's just, I mean, I'll be quite honest, for PayPal, that's just far too cheap in my personal opinion. I am obviously somebody that's used PayPal for many, many years. I don't see myself going away from PayPal anytime soon in terms of different things. So the space is very, very competitive. There's no doubt. But remember, everybody in the world has to use these sorts of products, right? Maybe it's not PayPal, or maybe it's not Venmo, and maybe it's something else. But at the end of the day, this is products that are relevant to everybody in the world. And so when you have that sort of business models, it's a pretty dang big deal. And when you're one of the biggest players in this space, money in general, whether it be money transfer, money payment, whatever, right? It's a massive, massive deal. And so PayPal, I look at this stock as being just one that's just getting a little too beaten down, never mind if it falls further. If we go ahead and look at growth for this company, we're going to see a few things. We're going to see EPS is expected to rise quite substantially this year and next year. That's great. PayPal is a more mature business, so it should be doing that. But look at the growth expected, 18% this year and 18% expected next year. Needless to say, this is a double-digit expected grower for revenues. And when you can get a company that's EPS is flying up like this and they're growing revenues double digits, that's, I don't want to call it the holy grail, but that's pretty dang good. It doesn't get much better than that. And so I look at PayPal, never mind. I mean, I didn't want to go super in depth on this. We could have went into the balance sheet and, their cash and investments position. We could have went into a lot in this one. And, if this is one I end up buying, there's no doubt I'm gonna go more in depth in this one in the future. But it's hard not to be excited about PayPal. So let me know what you guys think about PayPal stock in the comment section. I would love to hear from you guys in your opinion. Is this a stock you own? Is this a stock you're interested in buying? Love to hear from you guys as always. I think this one is looking pretty darn good. Let's just put it that way, especially if it continues to drop. High probability I end up buying that one. Next one up here. Palantir stock. It is flirting with $20-ish. Right now, $42 billion market cap. I'll be honest, I listened to the Palantir latest conference call twice now. I came away pretty darn excited about the company. Now, I will say the one thing that does annoy me is it does seem like they tried too hard on the conference call, if that makes any sense. It seems like the guys they have speak, the executives, they seem like they tried to sell it a little bit too much, in my opinion. Maybe they're just really jacked up for Palantir, but it's just like, I'm like, calm down a little bit, guys, calm down. You're not making a YouTube video here. You're on a conference call, like chill out a little bit. But anyways, those guys, they're really excited about the business model. I walked away, obviously, very, very bullish on this company. I've kind of been bullish on this company. I've just kind of been on the sideline, kind of seeing what's going to shake out here. They've only been public for maybe a year, a little over a year now. And so I'm looking at Palantir, and I see a company that I think is on its way to becoming a $500 billion type market cap over the next, 5-10 years. I think it's a business model that's going to be incredibly sticky for big companies that start to use Palantir and mid-size that eventually start to use this, never mind governments as well. I think it's going to be a very sticky business model, a business model that because they're at the intersection of data and artificial intelligence. I think it's going to be a business model that's almost impossible to get out of. I don't want to call it impossible, but it's going to be dang hard to break up with Palantir if you ever want to. And so I think this business model is poised to become one of those type of business models that all of a sudden has $5 billion plus of net income over time. I think it's going to take them many, many years to get to that place. Let me be clear about that. I think that's something that's going to transpire over the next decade. But I mean, if this business model gets to a place where they're doing $5 billion plus of net income, I mean, there's no doubt at all that this company could trade at, anywhere from a $200 billion market cap, if not above that, within the next, I would call it next 5-7 years. Because remember, these stocks are always pricing out into the future, right? And so it's always going to trade at a very rich forward PE. And the reason being is it's a SaaS business, right? And it's going to be seen as a very sticky business that you can't really get out of, and a business that's going to be extremely profitable over time. And so it's not out of the realm of possibility that within the next 5 years, this goes up to 150, 200, if not $250 billion market cap. Even if they don't have the net income to necessarily support a low forward P at that time, it's just a fact that people are looking at it from the standpoint of where's the profitability going over time. And remember, these sorts of business models trade far richer when it comes to anything, price to sales ratio, forward P, because they honestly deserve it, than like a food store would, or than Walmart would. It's just, or Coca-Cola, it's just different business models command different valuations. And a Palantir, they're at kind of the pinnacle of what you would expect to pay for a valuation for a stock. So I think that bodes really well for Palantir stock over the long term here, all right? Now, obviously, the company's getting to profitability, and that profitability, I think, should increase really rapidly in 2023 and moving forward after that. Expected around 40% growth this year, another 30% growth next year. Alex Karp has said that he believes his company can grow 30% a year for, I think it's the next 5 years, if I recall, he said that. And I don't see why not, honestly. And so Palantir is one of those stocks I'm looking at, and this is definitely a potential add for me over the next few months in the public count, especially if this one tanks at all. I think $20, that real price that, if you're thinking about tax loss harvesting, anything like that, I think that's the price a lot of folks are looking at. If it breaks 20, it could, break down to 17, 18 again. Regardless, I think it's honestly, even right now, for long-term investors, it's a buy. I think if you're short-term trading this stock, I think it's the wrong stock to be in. I'll just be completely honest, because you don't play around with a stock like Palantir. It's just not that type of stock, in my personal opinion. But those are 3 new stocks I could potentially add, guys. Hope you enjoyed this. As always, make sure you take advantage of that massive Black Friday sale we have. That'll be pinned comment down there. And before it ends, guys, we got the Tesla My Tesla deal, the jackpot sale, and you gotta be high to pass this up deal. And this is the first time we've done a deal like this literally since 2020. So take advantage of it now, or what do they say? Forever hold your peace. Anyways, guys, much love as always. Have a great day.